Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Thanks for joining us on the podcast today. And I made a commitment. One of the last podcasts that I did was around getting more investors in the studio. And I'll preface that with the conversation I had back then that, we've been really focused on this COVID-19 stuff over the last period of time and bringing in property professionals from all walks of life to talk through what they're doing, how they're doing it, how they're sort of helping their clients maneuver through COVID-19. And that's ongoing. And we'll keep on those focuses, trying to give those interpretations about what's going on. And, we've got a mortgage broker coming on soon to give you the tips and tools that you need in order to get your portfolio in the best state possible to drive forward as a property investor or even just manage immediate cash flow concerns. So we'll keep that balance up, but we're going to keep doing a lot more investor stories. And that's what today is very much about. And I made the call out probably a couple of months ago, pre-COVID-19. I think life now is always going to be about life before COVID-19 and life after COVID-19. And, we're right in the middle of it now. But prior to the health pandemic, we're doing a whole heap of investor stories in a marketplace, which is very different to what it was back then. There's a lot less stock on market. There's a lot less transactions taking place. A lot of that because of the fact that it's a lot harder to do it in terms of restrictions around the business of real estate, but also there's a lot less appetite in the moment for people to be committing to large financial purchases. That will change over time as confidence comes back in the market and we actually work out where we've ended up. But the market back then was a lot more buoyant. There's a lot more buyers in the marketplace, and it was definitely in most markets. And there I talk about mainly Sydney, Melbourne and Brisbane. It was very much the power was in the hand of the seller because there's a lot more buyers out there, but that's changed quite a lot. So that's the market then when I made the call out for more female guests to come onto the studio because we are underweight, and I'm conscious that we are underweight, and I think about it all the time, and we try our best to try and get more female guests in the studio. And for whatever reason, it's a lot harder than finding male guests. So I laid down that challenge, and thankfully that's been heard. So I'm in the studio today. Frances Conway. We're going to have a chat about her journey through property, what she does, how she does it differently, and how that's changing over time. Frances, thanks for listening to that call out and coming on and having a chat with us.
Thanks for having me, Phil. Pleasure to be here.
So I'm really conscious of the fact that we don't get as many or enough female guests in the studio as what we can do. And to give our listeners some sort of sense, we as an organization are really well balanced in terms of gender parity. So just on the Smart Property Investment product itself, our editor is female, a journalist is female. So we do really well in that regards, but by God, we struggle trying to find people to come onto the podcast. So thanks for that. And I'm trying to work out why that is the case, whether maybe it's a me thing, right? Maybe, I don't know, people go, I don't want to spend time with that guy, but it's not that scary, is it? It's all okay.
It's not scary, no. It's not scary.
It's really cool. So we want to tell more of these female investor stories. And one of the reasons why is that in a lot of property transactions, and from what I've seen navigating property investment over many, many years, typically the females that drive the decision-making in property investment decisions, whether it's a home to live in and raise a family, or whether it's the purpose of investment, it's either the female, and I'm getting sort of a bit gender specific here, but it's normally the female part of a partnership is driving growth in a relationship and thinking about the future and how we manufacture equity and plan for the future, make sure we can retire and all this sort of stuff. And guys normally get carried along. That's normally what I see, but I don't normally see it with female guests come to the studio. So this is our commitment. We're going to do a lot more of this, and I do enjoy doing it. Now, Frances, do you classify yourself? Do you identify with being a property investor, or are you just someone that uses property to plan for what is a better future for you?
Well, no, I don't classify myself as a property investor. I suppose we had a very brief conversation about this offline. I bought my first property on my own. I bought my second property on my own, and then my third property was with my husband now. But, we've got 3 properties, and, that's officially then a portfolio. But I don't classify myself or us as a partnership as property investors. But I suppose as a mama and papa sort of scenario, we probably are.
Yeah, well, I think you are. You are a property investor, and I think I've got a whole bunch of numbers in my head, so often I get these things wrong. I think 8% of all Australians per the ATO claim some sort of benefit or some sort of tax consequence of being a property investor. So, it's a big cross-section of Australia do invest in property. And, you always hear the government talking about mum and dad investors or mum and pop investors. And these are the Australians who own between 1 and 2 properties, which is the norm. There's, I think, only about 20,000 Australians own more than 6 properties. So you start thinking those numbers, it gets very small. So to have a property portfolio, you essentially have an investment property, and you'll definitely fall into that basket. So how did you get investing in property? You said your first property was in Amsterdam?
Yeah,
correct?
so I lived overseas for 12 years. My first property was in Amsterdam and I was 27 at the time, which I thought was relatively young to buy a property on my own. I lived on my own then, but in the Netherlands, you can borrow 110%. And so it was an absolute no-brainer. I'd already lived there a year, and the way their market's structured, you also then can claim your mortgage payments back off your tax if you live in that house. So it's the opposite to what it is here. So it was a no-brainer for me that I could borrow 110%. And then I could use my mortgage repayments as a tax deduction. I would be a fool not to have done that.
That's crazy. So Australia went through as a period of time after the Royal Commission, when the recommendations come down pretty much saying we need to change the way in which property works in Australia, how mortgage brokers are paid essentially. And they kept drawing on this Holland model, right? So what happens there? And I got, which was absolutely madness. People going, that's just not going to work in Australia. And then I hear about the property market out that way. And how does that work? I imagine property doesn't really go up and down in value very much if the government's underwriting the value of it through mortgage repayments.
Well, it does. And I mean, particularly in Amsterdam, it's such a there's a lot of international head offices there. So I think there's a lot of tax advantages for businesses to have their head office in Amsterdam. So there's a lot of expats that come there. And so there is a great shortage of housing in Amsterdam because it is, quite a small city. It's a population of 1 million really. And so there is a shortage of housing. But I think the reason that the government is trying to encourage people, particularly when I lived there, that was in 1999, because there's a lot of social housing and those prices can never go up, the rental can never go up. So people aren't encouraged. There's no real incentive for them to buy a house. Because if they get in the housing, they can live in a beautiful house in an amazing area and their rent is never going to go up. And I know a family member of mine, she's had the same rent for the last 40 years. And it would be ludicrous for her to go and buy a property. And so I suppose they're trying to encourage people to buy properties because then that takes, it removes people out of the social housing.
Yeah, privatizes
exactly.
living rather than the government carrying the can. I sort of get that now. And I'm not that familiar with the property dynamics out there. How did you end up in Amsterdam, by the way, working? Was that just one of these stories of a 20-year-old doing what a 20-year-old does?
Well, it was the whole, I need to go overseas. My mother was raised in the Netherlands. Well, she was born in the Netherlands and I was going for the 12-month. I'm going to go and hang out and see what it's like where my, heritage is. And then I ended up staying 12 years. But for me, I wanted to not end up in London like everyone else did. I wanted to learn another language and I really wanted to live on the continent. And because I had the connection with Amsterdam and I loved it, and I was incredibly fortunate that I got sponsored. And that was just an opportunity that I could never, ever let go.
So you lived there for 12 years?
No, I lived there for 5. Okay. And then I did end up going back to London.
Okay.
Like everyone does.
Yeah. So it's a long time to be away from home. What brought you back to Australia?
Family.
Okay. Just time.
Yeah. Ironically, it was actually my Dutch grandmother who was on her deathbed that I came back for. And then in the end, it was like, it's now or never. I've got to give Australia a go again and see whether I can live here again.
Yeah. Good transition back to Australia?
No. Very difficult. I mean, I've got my family here now. I've got my own daughters here and, I'm settled here, but I still miss it a lot. And it certainly shaped me as someone in my 20s and early 30s. It certainly shaped me into who I am today living in Europe.
Yeah. It's a good opportunity and it's a good story if you can get it because it does give you a different interpretation for how the world works, right?
Absolutely.
Did you get back obviously you're not going to be able to get back at any point soon, but do you get back to the continent very often? I
went 2 years ago and the year before that for work and I hadn't been there for 8 years, so not that often.
Yeah. Oh, it's a very different lifestyle. So you obviously don't have the property there anymore in Amsterdam.
Not in Amsterdam, no. Unfortunately, it's probably my biggest regret. There were many reasons. I mean, I moved back to London, so it was very difficult at that stage to rent a property when I wasn't living in the actual city or in the country. So I did actually have some tenants. There was a lot of insecurity about whether they were going to stay or not, but the agents weren't really interested in renting out properties at the stage where, that the landlord was not there. But now, there's Airbnb, and the expat community there has just developed so much since I was there that it would have been a property I could have really easily rented out now. But I just couldn't cover the mortgage if I didn't have any tenants. So it was like, I've just got to let it go.
Yeah. And this is a choice that you have to make sometimes. So did you have to sell that property and then you just utilize those funds to buy in London? Is that how it works?
Correct. Yeah.
Okay.
So that's.
Yeah. I want to chat about that. We just go to a break beforehand. We'll be back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with Francis Conway, investor, Amsterdam investor, sold a property in Amsterdam and I guess replaced it in property in London. How quick was the transition from realising the sale of your Amsterdam property to getting into the London property market? Where in London were you?
Oh, well, I've still got that property. So that's in Westbourne Park. So for those who are really au fait with London, it's a W10 postcode. So it's technically regarded as North Kensington, but it sits between Westbourne Park and Queen's Park. So I rented for quite a while in London. I was really unsettled and I knew I had to buy my own property again. Yeah. So that was one of the reasons I sold Amsterdam, and then I bought in London and basically was able to do that up. So I did up Amsterdam myself. I did up the London property as well, and I've still got that tenanted now.
Okay. And what was the Amsterdam property? Are we talking houses, units, flats? What did you have in Amsterdam?
So I had an apartment in Amsterdam.
Okay. And you did a full renovation on it?
Yeah.
Okay. How did you go renovating in a foreign country? I guess you had the language, which probably helps quite a lot because you can.
Well, I didn't have the language when I bought. I had bits of the language. I don't know. I think it was just using the resources that I had in terms of talking to people that I knew that were able to recommend tradesmen to me. I would source all the materials myself in terms of, the kitchen and all that sort of stuff. And I suppose I had enough of the language that I could get by.
And what did you sell the property? What did you pay for the property versus what you sold it for? If you can remember.
It's difficult because I was in two different currencies. So I bought it for 395 guilders. You're probably going to ask me what's the conversion from guilders to euros, and I don't know. I suppose I could have Googled that. And I sold it for 195 euros.
Okay, in around 2000 and
2006 I sold it.
Okay. And did you get capital value increase from when you sort of
Not really. I bought high and I sold low. So the absolute what you shouldn't do, but it was really circumstance that made me sell it. So with the money I spent on it, which wasn't that much, I probably broke even. So I certainly didn't lose, but I certainly didn't make a whole lot of money out of it.
I guess it's sort of
the
full
stress.
Savings and stress to take to London. So, so what did you buy in London? Another unit?
So I bought an apartment in London. So I ended up going for an ex-council property, which we don't really have in Australia. So that meant that it had been rented out as a council property. And they were generally had a much better floor plan. So it was a really good 70s floor plan. So it was much larger than any of the other like heritage properties that you could get. But my big requirement was it had to have 2 bedrooms because if anything ever happened, because again, I was buying it on my own, if anything happened that I lost my job or whatever, that I could rent out the second room to help me cover the mortgage. And that paid for itself because that did end up happening to me.
Okay, so you got a lodger in, did you? A flatmate?
I got a lodger. I did actually end up being made redundant. And the first thing I did within a week, I had a lodger. And that just took so much financial stress away while I was looking for another job. So I'm really glad that I used that strategy to make sure that I had a backup because I knew the buck stopped with me the whole way.
Yeah, and this is what you always got to be planning for the worst and hoping for the best, right? And how much did you pay for the property in London?
So that was £249,000. Okay,
that's not a bad asset then.
Yeah, and guess when I bought it though? Just before the GFC hit.
Okay. Who was your lender? Northern Rock, I hope.
It was Northern Rock, and then Virgin
really?
Money bought them out.
Yeah.
How did you know it was Northern Rock?
I don't know. I just sort of thought, I bet you it's Northern Rock, because just to compound the story. I remember back then
How funny.
Northern Rock and all those, the madness that happened in the UK mortgage market subsequent to So that's okay. Yeah. What sort of interest rates are you paying? Do you remember what interest rates? Is it still with Virgin?
I'm still with Virgin. Yeah, I haven't changed it. That's probably a little bit slack. So the mortgage on it's 225. It's just interest only. And it was positive. It was net positively geared, which is why we kept it. It's only very recently it's gone into being just negatively geared, but I do claim that back into Australia as a negative geared property. But it'll probably go back into being a positive geared property soon enough. So that's the only reason we've kept it. We did, when we ended up buying all the stuff we bought in Australia, think was it better to get rid of it. But by the time you pay all your capital gains tax on it, it was just hardly worth doing it. I thought we'll just leave it there as my pension.
My wife, before I met her, she's got property in the UK, still has it right now. And we have the same conversations, like, what do we do with it? Do we keep it there? Or, it's just a nice diversification play at a point in time. And I've been watching her the last sort of 4 or 5 years. It's all positive, right? The interest rates have been so low. It's absolute madness. And she actually rents it out as council housing, which is, again, it's different to how it works in Australia, where you have pockets of, in apartment blocks where, some of them might be council, some of them might not be, or the council underwrites the rent for the tenant. So it's all very, very different. But, if you've got an asset in London, you'd be trying to hold on to that as much as possible. It must have gone up in value quite a lot.
Look, it has. It's interesting because we've had the conversation, my husband and I, about, do we get rid of it? We've probably had that conversation over the last 10 years about 6 times. Look, is it better off just getting rid of it? But I suppose because it's positively geared, it's not really costing me anything, and we'll just sit on it for capital gains. It's probably valued now at around, 340, 360, although the market's taken a hit now with COVID. But it's sort of, it'll need work on it. And I suppose I have this dream that one day my girls can go and stay there. I did, and that would be nice to think that it's sort of in an up-and-coming area, although when I was there 2 years ago, I thought, gee, this up-and-coming movement that I thought was going to happen hasn't hit that area yet. But we would have been better off, in hindsight, selling it and investing here, because the growth here would have far surpassed what's happened to it in London. But hindsight's the best side.
It is. And then look, you got to think about Oz diversification. It's being in multiple markets, and there's a lot of merit to that debate. But then it's also about the utility of your money. And a lot of people have that conversation here where they've got an asset in Australia. It's probably not performing very well. If only they sold it, took a small haircut, and reused that money to put it into a growth asset, they'd be doing a lot better. So these are decisions. But I get that, it'd be nice if your daughters would use it as a nice base in London. That's pretty cool. I wish I had that when I was living out there, and a nice apartment to live in. But, and these up and coming areas in London are quite good fun. They're gritty. They
are, and I suppose that's London overall. I mean, I could walk to Notting Hill in 10 minutes, and I used to shop at Notting Hill Market, so it's in a really, really good location. And I suppose because when I left, it was always meant to be very temporary. I really thought that I'd be coming back, or that we would all move back to London rather than, stay permanently back in Australia. So anyway, it's there, and it is diversification. I'd love to think that I've held on to it all this time and the girls can go there. Let's see what happens. Watch this space.
Well, you never know. It might be a retirement place for you guys, right? You might want to go and live in London. It's,
exactly.
So to never have a winter again, right?
Well, that's right.
Would be the way to go. But I want to have a chat about the stuff you have in Australia, but we'll just go to another break, Francis. We'll be back in a moment.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Welcome back, everyone. It's Phil Tarrant here with Francis Conway, chatting all things international property, this journey to investing in Australia. And I hope you're enjoying the Smart Property Investment Show. We're pushing through COVID-19. We're still recording. I've set myself up a mobile studio where I can record from. The audio quality is not as good as what it normally is if we're in the studio, but it means that we can keep at it, and we're connecting with our guests right across Australia. And Francis, where are you? You're in Melbourne, right?
Melbourne.
So this way, we're borderless now. We don't need people in the studio,
Yeah.
so we can cover. Where in Melbourne are you based?
In Bayside, in Hampton.
Okay, oh, that's very nice. That's cool. Yeah,
Nice
and
spot.
and so this your principal place of residence where you're recording from right now?
It is.
Yes.
I'm in my home office, in my principal place of residence, my forever home.
Your forever home. That's good. And so do you have any other investment properties outside of what you still got in London?
Yeah, so we've got a property that we bought when I first came back from Australia and I met my now husband. We bought that in 2009. So that was the house that, was to be our family home basically. And so we bought that, quite a big block of land, with the intention to renovate it. It was a bridesmaid suburb of where we live now, because we couldn't afford to live where we are now at that time. So the idea was to buy in it, or my idea then, I had to pitch it to him, was to buy in an area that had higher growth than where we wanted to get back into. And so it took a bit of convincing on my part for him to do that, because, it wasn't as nice an area as where we are now, but my strategy paid off big time.
So you bought that property, and how much you pay for? What was the property?
It was just a red brick.
Just a red brick.
50s house that had a crappy extension on the back, but a big block of land. So our strategy was to buy the biggest piece of land that we could, with a house that we could effectively live in. It was dated. We paid $680 for it in August of 2009. Okay. We felt that was, it was 726 square metres of land. We felt that that was a little bit high, but there wasn't a lot of stock around. It was winter. And the idea was to renovate it. And when we moved there, we realised that, we really did want to get back to that other area, or Hampton or Sandringham. And I had my first baby. And then within a year, we'd already started planning to subdivide and put a house on the back to get ahead, so that we could, that was our strategy, to then be able to make enough money that we could then move back to the area that we wanted to live in, the blue chip area.
Okay.
So my husband had an apartment in Paris that we sold.
Okay.
To do that. That was costing us a lot of money. It was costing us $1,500 a month. So we just couldn't afford to keep it, although that is a property that we really wish we had have held.
Is your husband French or Parisian?
No,
or is it
he's also Australian, but he lived in Paris for 8 years.
Okay. I'm sure there's another story how he ended up with a property in Paris, right? But
I wasn't there. Well, he lived there for a long time, and he bought this amazing property, but it was just costing us so much money. But he had a flat interest rate of 3%, and it was 3 years off being repaid. The whole thing would have been paid off. We just couldn't afford it. I can see your facial expression. I mean, it's just, wow, what a shame. But
yeah. But, but that's money, I guess, you realise that you bought it home and help underwrite the cost of.
Exactly. We couldn't have done what we've done without selling one of the properties, and we realised that Paris was costing us a lot, and it was going to get us more money by selling it than selling London. So it enabled us to do what we've done. And, I mean, we have built a really lovely home. We live in a really nice area. So you've got to sacrifice something. You
have to. And it's also the decisions you make today have consequence tomorrow, right? Like, selling your Paris place, look, it could be worth a squillion dollars more now, but you've been able to transition those funds in Australia. So that strategy around buying this place to subdivide and build a place on, and I guess sell one, did that actually happen? Is that what you did?
Oh, yeah. So that wasn't our intention when we bought the property, though. So it was really, we had to think of a way to make money to enable us to get back into the area we wanted to get into. So the whole, let's subdivide. We've got the land. We know we don't want to stay here. So we kept the house at the front. We built a really good house at the back, which was single level, which means it was really appealing to downsizers. And most developers at that stage were building, as they are now, 2-story houses. So we ended up selling it in 2011. It cost us $280 to build, and we ended up selling it for $890.
That's all right.
We were pretty happy with that.
Yeah. And sort of what were your costs to split the block and do all that sort of stuff?
So it was $280.
Oh, including
$280.
All that.
Yeah.
Okay.
So we did put some money into the front house as well to renovate that, to get rid of the crappy extension.
Yeah.
So we spent $100,000 on that to bring that up to speed a bit, and we we kept the front house, we sold the back house. We pretty much had no mortgage on the back house when we finished, and then we sold that. So all of that money went into building the
That's
PPL.
Good. That's good business. You know,
Oh,
that's
thank
smart.
you. I feel good now.
Yeah, you should do. But that goes to show, number one, a pivot. So you thought you'd do one thing with it and you went, yeah, it's probably not the way it is. But
Pivoted.
so where can we get utility out of it? So what would be the value, do you think, of the front house that you still own?
So the one that we own now at the front, it's probably worth about $950.
Okay.
And the mortgage on it's $480.
Okay. So you got plenty of equity there.
So we've got good equity.
So you bought that 726 square meters house for 680. So the positioning of the house was good because you could build a subdivide it, and you pretty much manufactured yourself, $700,000-800,000.
Yeah, that's right. In 2 years.
And you still own the original property, that you're renting out.
That's exactly right.
That's a good story, I would say, and for the purpose of building the dream home, right? And your forever home, which is
that's right.
Yeah.
And look, we really stretched ourselves, I have to say, to build the forever house. When you start building, you sort of, oh yeah, we'll have that and we'll have this. And, we talked at the start about, okay, so we've got a portfolio, but I think we've really fallen into it because one of the other reasons we subdivided is my mother needed a house to live as well. So she now lives in that front house.
Okay.
So we've got a house for her. She knows that she's never going to be evicted. We've got a really good tenant. We know then that it's our super. It's, it's in a really, really good area. That area's gone crazy. So I suppose we've fallen into it. I think if we moved into the forever home and my mum wasn't in that house, we would have sold it to release some of our mortgage stress. But as it is, we've hung on and it's been very positive for us to have hung on to that property.
Sounds like everyone wins from this, right? I hope you're charging your mum market rate rent, though. You look after him, right?
Yeah, got to look after her. Yeah,
got to look after him. But that's your privilege to do that, right? And that's a cool thing.
We're getting the capital gain, and we were talking about it today. Is it one of those houses that our daughters end up moving into? It's 2 kilometres from where we live now, or does it buy us a holiday house when my mum goes, or who knows? We'll have some choices.
Who knows? And this goes back to this whole idea of you sort of initially, like, is it a property portfolio? Well, it is. There's so many different moving parts, but there's different assets with different reasons. And some of those reasons are commercial and some of them are more lifestyle. The fact that you get that. So that's really cool. It's a good story, So is that it for you guys? Maybe a holiday house in the future I'd
really like to get a holiday house. We've looked into it. I'm probably more, my husband's more risk adverse than I am. So I'm sort of like, let's, refinance.
And this goes back to my point about the female part of I don't even know if I can, and I say inverted commas, a traditional relationship, because I'm conscious of there is no real traditional relationship anymore, but in that environment, you're driving, you're leading the way, which is good.
Yeah, and I suppose I pushed more for the it's funny, it sort of swings in roundabouts, but I'm generally the one that's saying I think we should, invest more, or let's refinance this place and let's go and get an investment property, let's go and get a holiday house or whatever it is. But my husband's more like, let's just pay this off. And I'm just like, I've got all my life to pay this off. Let's just go and invest something else. So, and it's interesting when we talk to finance people that they're like, oh no, you'll have to just wait for him to come on board. And where I just, But anyway.
A lot of the best mortgage brokers I know are also some of the best sort of marriage counselors as well, in terms of balancing two different, because money's a funny thing, and I think, irrespective of the relationship, but people come into a relationship with different attitudes towards money. So it's always funny to see how they work out, and a good broker is able to get both sides on.
They do. So, but I think we'll be here. I think, we'd love to buy a country property, and have a bit of land. So whether that means we end up selling this one day, even though it's the forever home, I'm not sure. But we really put our neck out to do this, even just buying the land. I used to have sleepless nights. I think I've bought all my properties in exactly the same way, mortgaged myself to the absolute hilt, having all the sleepless nights and knowing that I'll get a pay increase or I can get a lodger in or whatever it is. And it's always paid off. And so my husband would never do that. But even buying the land, I thought we've paid too much. And in the end, I mean, we've really done well with this place, but we probably shouldn't have got the money.
I wouldn't ask the questions, and everyone's got different relationships with risk,
that's exactly right.
Trust your instincts, do what you do, and understand there is consequences if it doesn't all go wrong. But if you plan for what to do, and you've got a lot of fallbacks there or redundancies in that, you look back to your London place, the fact that if you lost your job, you just get someone in. Hence the reason why you bought a 2-bedroom property. Yeah, makes sense. Yeah. Thanks for telling the story, Francis. I enjoyed that.
That's okay.
Yeah,
let us know
how you get on with this. this next investment, this holiday place, if that happens, when you do that, come on and tell us all about it.
Yeah, I'd love to have the holiday house. Got to get those. Got to get my husband on board.
Well, that's outside of my remit here. I'm just here to have a podcast, right? Navigate a conversation. But thanks so much for joining us out of Melbourne. And if you're tuning into this and you want to have a chat with us, it doesn't matter where you are, whether you're in Rockhampton or Gundagai or Port Hedland or wherever you are. Get engaged, get connected. Tasmania, for example, we haven't had many Tasmanians on the podcast. We'd love you to come on and tell us your story. Like Francis, we've spoken about Amsterdam, London, Paris, and Melbourne. We're not normally that cosmopolitan here on the Smart Property Investment Show, so it's good to challenge my geography again and making sure I've got Dutch, Holland, and Amsterdam all in the right place. So it's always
excellent.
Good. It's always good. So thanks so much for your time today.
You're welcome.
Nice one. I hope you enjoyed that, everyone. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, see the first to know what's happening property right across the nation, smartpropertyinvestment.com.au/subscribe. Social media is just Smart Property HQ. Check us out there. And remember, every Thursday at 1:30 on Facebook, I do a live with Tom Panos where we talk all things property, what's making headlines. Go and check it out. You can watch it on the Smart Property Investment Facebook page or on Tom Panos's page as well. We're getting some really good reviews on it, so we'll keep at it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.